Hello, welcome to this video presentation. So in this presentation of our crypto course, we are going to run through technical analysis. And first is that we are going to go through the slide, and as you are taking this slide, we'll be doing the practical. Now take it again. As you are taking this slide, we will be doing the practical using trading view. Now, after though we're supposed to have done introduction to trading view, but I'm going to drop another video right after this one to walk you through on how to set your trading view, because that is where the technical analysis will be taking place, right? So first, before I go into technical analysis, there are three types of analysis. We have the fundamental analysis, which is the main thing that determines the movement in the market. Don't be deceived by any other thing that people might tell you or you might encounter in your trading career. Just note that the major thing that determines the movement in the market is the fundamental. Technical analysis is a process, as we are going to go through the slide, to analyze the market using the historical data. You understand? Now, let's get started. Okay, I think I was also explaining or mentioning the types of analysis. We have technical analysis, we have fundamental analysis, and we have sentiment. You understand? So you are going to have knowledge of other ones, but today we're going to be talking about technical analysis. All right, so let's get started with our slide. Now we have technical analysis is just understanding the approach to evaluating market trends, that is determining or walking through the market trend, checking the market trends, knowing where the market is coming from and where it's going, checking, evaluating whether if the market is down presently, and is it up, is it going to go down, or is it going to go up? You understand? Is it ranging, right? So market has two types of trend, or two types of trend, which is uptrend and downtrend, and what we call ranging. And you are going to see all of this as we proceed. We have uptrend, we have downtrend, and we have ranging. So let me show you this before we come back to explaining all of this. So let's use this particular coin, which is SU. This is SU USD. So let me show you what it means for market to be uptrend. Now let me come to this place. Okay, so let's see here. I'm using my trend line to take the trend from here, yes, okay, I want to get this very point, okay, here. So I'm taking the trend to this. All right, so look at it here. All right, so look at what exactly happened here. So at this point the market was uptrend. Look at what happened. This is where it peaked. It started going up. It moved from here to this point, right? It dropped, it rejected, it came down to this point, or the trend line. It retraced to the trend line, it rejected, it went up to this high, it retraced down to the trend line. So if you check this movement, you see that it's up, it's not coming down. So this is what we mean by uptrend. It rejected on the trend line and it moved to this high, right? When it moved to this high, it came down to this trend line. It broke the trend line. It broke the trend line here. It retraced to retest the trend line here, and it went this down. Now market changed trend at this very point. So the market changed trend at this very point. I want to mark it here. This is where the market changed trend, at this very point here. So when it broke that trend line, it is no more an uptrend. It is no more an uptrend. You understand? So this is what we mean by uptrend. Now downtrend, this is downtrend. So let's identify the downtrend. Now here I can put my trend line here, not here. Let me go up a bit. Yes. So I'll use my trend line here. Let me put it here. I'll take it to this way. Let me see if I can get it. Okay, so let me stop here and put this. All right, so now this is my trend line. So in our next class, in the next video, where I'll be introducing trading view, I'm going to also explain all of these tools and how you can use them. All right, so here you can see that market was coming down from this point until here. What happened there? The market broke the trend line. The market broke the trend line, and when it broke, what happened? It still came down to retest this particular level, and it went up to this high. I hope you are getting it. So this is what we mean by uptrend and downtrend. Now let's check the ranging. Let me show you the ranging. Now here is where you get ranging. Let me pick this particular tools. Here I'll put it here. I'll put this here because this is where it started ranging. Here, don't worry, I'm going to change the color so you'll be able to see it very well. All right, so at this point, I want to change this. All right, so this is great. All right, so look at inside this rectangle. Look at inside it. The market was just going up, coming down, going up, coming down, just within inside this box. You understand? So it never broke it, break it until this very point here. When it broke and it came back, what did it came back to do? To retest a level, which is this level, and it rejected instantly. It started going down. This is what we call ranging market. At this point, you are not expected to take a trade in this box. Sorry, let me remove this. The advertisement is too much. Always okay. So in this box, you are not expected to take a trade. If you are taking trade here, you are just gambling. Why? Because you don't know where the market is going. All right, so that is it. So let's get back to our slide. So I believe this point you have understood the three types of market movement, right? So let's continue. Now we have number one, a method which is explaining technical analysis. So technical analysis is a method for evaluating securities and making informed decision. You want to take a trade, you must do the technical analysis. Why? Because the technical analysis is all about revealing the past history, using the past history to determine the movement of the market, whether the market will be uptrend or downtrend. And when the market is going uptrend, you are going to place a long because it's going up. But when it's going downtrend, you're going to place a short, right? Now the second one we have here is analyze price movement to identify trends and patterns. Now when you analyze price movement, you'll be able to identify the trends, whether if it's going up, like the trend line I used to identify the uptrend, the downtrend, and the rectangle that I used to identify the ranging, right? Now let's go to the next one, which is helps predict future price movement based on a historical data. So this helps to do what? To identify future price. After your technical analysis, you'll be able to say, okay, price is going up or is coming down, or at this point price is just going within a particular zone, going up and coming down. You understand, which is ranging. All right, so let's go to the next slide. The next slide is understanding candlestick. Now I will be giving a PDF on how to read candlestick. This PDF contains all, I think I have dropped, okay, what I dropped is chart pattern. I'm going to drop candlestick pattern, how to identify candlestick, how to know what the candlestick is talking about, right? So let me quickly show you something on the chart before we come back to it, because this is theory and practical, so we're going to do more of practical. So let's go to the trading view, right? So here we are. So there is what we call candlestick pattern. Now candlestick, all of this thing you are seeing here is candlestick, but each of them has what it's speaking, has the information that is passing. Why? Because this is the strength of buyers and sellers. Whenever you are seeing red, that means it is a sell, and wherever you are seeing blue, that is a buy. Understand? And when you are seeing blue, that means the market is going up, and when you are seeing red, the market is going down. Now let's use this particular place for example. Now this is a recent low. Let me show you this, what I'm talking about. At this very point is a recent low, right? So this is a demand zone. We're going to talk about zone as we proceed in our lesson. This is a demand zone. Now what do you expect in this particular place where price came down, rejected, and came down to that the same zone and have a candlestick pattern? Now what is this candlestick mean? This is called engulfing candle. This particular blue candle you are seeing here that took off this buy, that took off this particular buy, is called what? Is called a candlestick, bullish engulfing candlestick. Let me put it this way so that you'll be able to see what I'm doing. I want to put it this way. All right, so just hold on. I want to put it the way you can be able to see it very clear. Okay, so let me place it this way, then add like few. Okay, let me change this to green and make it thick, a bit thick. All right, as you can see, that red is a buy, is a sell. That means sellers try to sell below this recent sell you are seeing here, but buyers are already waiting. They wanted to sell below here, but buyers are already waiting. Buyers came with force, they pulled it back, and as they pulled it back, they also use another strength to take off the whole buy. Let's say for example, you are in the market and somebody come to buy a particular product that is sold of 10,000, and you came from that 10,000, you added money and you buy it with 15,000. You have overpowered the seller. That is what this particular candlestick, which is known as bullish engulfing candle. Bullish engulfing candle. This is the bullish engulfing candle. This blue candle that opened from this place that the seller stopped. The seller stopped here, right? Now it opened here as the seller stopped selling, and they buy and bought more than what the seller have sold. That is what this particular candlestick is explaining. And what happened after that? Look at how far the price has gone. Look at how far. Now at this point, the price of this was how much? Was $3.06, and they keep buying until it went to how much? It went to $3.08. Now how much did they added? That is about 3 cents. It's very massive. You understand? So that is what, look at where it came. You understand? So that is the power of candlestick. Let's go back to our slide. Okay, so candlestick learn the basic of bullish and bearish candlestick patterns for trading insight. So what did I show you now? I showed you a power of bullish, where the bullish candlestick pattern came and it started buying from that point to about $3.08 from $3.06, right? That is the power of bullish. So let's do bearish. Okay, so let's identify bearish engulfing candle. Not just bearish engulfing, there are many candlesticks. So let's use this. Let's use double tweezer, right? Okay, there is no double tweezer. Okay, so let's use this. Okay, so here is another bullish. This is bearish engulfing candle here. So look at bearish engulfing candle at this point. This is bearish. At this point, it was the bear, which is sellers, that overpowered the seller, the buyer, sorry. Now buyers came here. Hold on. So here, buyers came here. Buyers were pushing the price from here, from where we have double bottom tweezer, to this very point. It was very hard for them to go up. They came and retested this particular okay, they came down to this point and they tried to push it up. It wasn't still easy, and the sellers came with a full force, took off the recent buy and drop it down to this very point, and they still continue selling until it came down to the trend line. Now this trend line, it rejected and went this high. So this is a bearish. I just explained bearish and bullish, but we have more than this that speaks in the market. We have more than this. So in the PDF I'm going to give you, are going to see others like Marabuzo, like double top tweezer, double bottom tweezer. You're going to see so many of candlesticks that you should pay attention to, not everywhere, but at a particular zone. Now let's say, for example, in a demand zone or supply zone, that is where you pay attention most times on this particular candlestick. You understand? Now let's go back to our slide. All right, I believe by now you have understood the bullish and the bearish candlestick pattern for trading. You understand? So others, you're going to get them, and also during our other sessions you're going to learn more about the candlestick, because that is not just all, right? So bullish candlestick indicates buy pressure. Now whenever you see a bullish engulfing candle, that means the buyers are already in the market. They want to push price up. And when you see bearish candlestick pattern, you should know that sellers are in the market. So let's proceed. In our slide, we have understanding market trends So you need to understand whether if market is up and down, as we have explained earlier. So using the tools called trend line, that is when, as you can see here in the chart here, sorry, in the picture we have here, market was what? Up trend. So this is an up trend in the market. Market was going up, and when you see market the chart going like this, that is down. But when you see it going like this, that is up trend. Now, analyzing price movements to identify market direction and opportunities for traders. Market trends reveal key insights about potential trade strategies and investor sentiments. So that is it. I have explained the market trends. Now, support and resistance. Now let's go to the chart as I show you what a support and a resistance mean. Alright, here, so let's check what a support means and a resistance. Now let's use this particular place. Okay, let me not use this ranging. I want to use a movement, a clear movement in the market where you can really understand it very well, so that you'll be able to identify the support and the resistance zone. And the support zone simply means a supply zone, and the resistance zone simply means a demand zone. So just have that in your memory. So I want to open to okay. All right, so look at this particular place. This place is known as, hold on, let me get this very well. I want to get it where it does repetitions, so that I'm using SU. I can change to another coin, or let's use SU to run this one. Okay, so I think I have something. I want to see it where it have like many. Okay, let me keep moving. Let me keep moving. Let me keep moving. Let me keep moving. Support, resistance. All right, so this is it here. So this particular point, okay, let me use this and show you a support. So this is a support zone. This particular place is support. Let me see if I can. Okay, so no, this is not a good point to review this. It's not a good point, so let me keep going up until I see okay, I want to quickly use this to show. I think this I want to show you with this. So let me run it this way for a better understanding. All right, so this is an uptrend, right? This particular place is an uptrend. The market was really going up. So anytime price comes here, anytime this is a support, anything below is called support. Any place that price rejected below is support, and anywhere it rejected up is what? Resistance. So price comes here, rejected. Price comes here, rejected. It came here, rejected. This first place is a support, and this is a resistance. You understand? So let me just use this trend line to show you. Now anywhere you can plot your trend line. Okay, so let's use here. Let's put a trend line here. I think I'll need to put this in 4 hours so that all of this. Okay, so let me place this in 4 hours. You can see more clearer with 4 hours chart and be able to understand more clearer. All right, let me delete this. All right, so I want to go back. Okay, so let's make use of this. Let's make use of this. Let me put my trend line here and connect trend line. Let me put it here. Okay, oh, you did not give me. Let me put it in a very good point, which is here. I believe you can see my. All right, now let me put it here, then take my trend to up and see where it can. Wow, okay, so let me check the movement. All right, now let me show you guys something. Now this place served in as a support to the price movement. Here is the support, here is the support, and here I want to show you resistance with the same trend line. What happened? So trend line can serve as a support and a resistance. You understand? So here it serves as a support, but here it serves as a resistance. You understand? When price came back, as it breaks this trend line, it came back again, it rejected here and it dropped, right? So that is support and resistance. So the key concept for successful trading and market analysis and technical analysis. So support and resistance is the key concept. You understand? So you need to identify support and resistance. It is very important. Understanding support and resistance level is crucial for making informed trading decisions. So you want to make a good trading, you must be able to identify support and resistance, because price respects this particular two places in the market, support and resistance. So let's proceed. Alright, so the next one is candlestick patterns analysis. Analyzing how candlestick interacts with market trends and key levels is essential. Now I have explained the candlestick pattern, so it is important to understand. It is important, very important. You understand, to be able to analyze the candlestick. You understand, know how it works in the market, know what it means at a particular place, zone, a particular point, and in the market movement is very important. Understanding the relationship between candlestick pattern, trend lines, and support resistance level can significantly enhance trading strategies and decision making. So first is you need to understand the relationship between candlestick patterns, trend lines, and support and resistance is very important, because this is the key things that gives you either you are to go long or short in the market, right? So at this point, this is the end of this particular trading tutorial. So on the next video, I'll be sharing key insight about how to navigate and set up your trading view. Thank you for watching, and see you in the next video.